Alrighty traders, George here, and time for a look at the week ahead. Here's what's on my radar. To start out with, looking at the balance beam model, I've got the S&P futures here, and if you recall the last video that I did, I was looking for upside for price to break over this level and really continue this impulse here. We've already started to do that. I've created a whole new trade grid off here to the right, and what this is really revolving around is, if you look to the left, there's this spike right here. There's this balance beam which has an indication of trading commitment at this particular level. It's around the round number of 2,000, a little bit north of that level as well. We're at 2006 right now. And this is a spot where we're basically into a larger scale zone where there's not as much trading, an air pocket as I like to call them. So the trade scenario that I've got here is for price to either break higher to get long and finish off this impulse to take it up to the top, or to break lower, show some weakness below the number of 2,000 and fade back against where it came from. On a break lower here, it's going sooner into trading commitment, so I'm looking for 1990 and 1982s there. And then if it breaks down more, the floor support area of this balance beam region here comes in at about 1962s. If it can trade over 2012s, then up to 2029, 2049s, and 2074 quarter for upside. But this is stuck here Monday morning in a really contracted range and not able to do much to get out of this area altogether. And really the catalyst for it will be this zone here, just seeing price own the top or lower level at this area here. So that's where we are right now for the S&P, and that's the trade scenario I'm looking for. Keep in mind that if price moves up or down enough to trigger these entries here and maybe reverses back, think about it 2 times initial risk that we look at for day trading. So 2 times 150 is 300. And then also think about a re-entry if price recrosses that area. And you guys that have the balance beam model, you know how to do that with your fib dots. For oil here, I've cleared out all the trade scenarios from the last couple videos, and if you saw the weekend review video, then you know that I called the exit at 49.23s, and since then we've broken down pretty hard. We're down to 47.39s right now. Looking to the left, into the upper 47s is where we break back below this balance beam right here. So this zone right here that was given some new attention with this impulse here, this grew in prominence, and the bulls initially tested it as support, but here they've let it go and it's now been taken over by the bears. And this is not a good scenario for oil in terms of a healthy impulse moving up, because this is an area they just converted to support and they just let go of it again. And if you look to the left, well, somewhat of an air pocket, not as much trading here. So here's the scenario I'm painting for oil. The number one scenario would be that we sell off more and we drive down and trade below 46s. And in doing so, what would happen is we would pull deeper into this more dominant balance beam here, and then we would bounce off of that area. And as we bounce, we're going to slowly move our way into the 46 price point, and that's where we would look for a long, as price coming back up and being long over about 46.10s. Perfect. 46.12s for the entry, and on the way up initially, the other scenario outside of driving lower and then trading higher would be we start to rally from where we are now. We really don't drop anymore from here. We cross back over 48 and then break back below 47.84s and then look for 47.05. So I'm looking for a sell-off and then a bounce, or a rally and then a fade. So it's going to need to do more work either way here. For Halliburton and for Freeport, let's take a quick look at them in case you still have positions there. Freeport, make sure your stop's up to 12.49s. Okay. For Halliburton, make sure your stops are to 38.49s. Okay, both of those trades moving really well in favor, and if you happen to still have anything in the mix, basically you don't want to hold any lower than those points that I just highlighted. And then if you were in the room on Tuesday, I think it's a different chart. I highlighted VMware. This is a weekly view of this stock here, and this one was really pressing to the downside here. I was looking for price to break below 78s to get short, and then if you look to the left here, it just runs away from this level until we get down to the low 71s and then to the mid 67s. And you can see this morning this thing just gapped down and it's not looking back. If you happen to be short on this one, Get your stops to target 1 here, okay, all the way down to 71.17s. And if it gets some follow through, fine. If it snaps back up, you want to be out on this guy if it crosses back over this balance beam. But there is another balance beam trade that was called in advance, this one in the room, and really went in favor quite a bit when it was triggered. We'll talk about this more in the live room, so make sure you use the link at the bottom of the video. You can watch me day trade these markets and check out some higher time frame analysis on the balance beam model. And until then, I'll see you back in the live room.